we'll just start with a little SPY right here. All right, so just what I want like to everyone to see. If you go like the last 2 weeks have been like this, so it's just been a consistent downtrend. We got a huge pop and then it just sold off again. Huge pop and then it sold off again. So obviously, if you're looking at this chart, it looks really ugly, right? All I want people to do is whenever like we get volatile or we start dumping a little bit, you got to always zoom out. So first we zoom out to the 4 hour. You see this trend I have drawn here? We got the clear channel. We have a support within the channel as a midpoint mark. So all I want to show you right here is we are still within this channel. Like the world's not over. And honestly, the way that our stocks have been dumping is way over exaggerated just because everyone's selling those high flyers that we've been buying for months now. So the screens, and if you guys have any questions, actually, just can you guys message in the Discord, not in the Zoom, because I'm gonna close this chat just so I can see. When I ask for chart requests, just message it in the Discord chat, the premium chat. Okay, yeah. So basically, what I was saying was we have this very clear channel uptrend, right? Even last time, in February when we had that dump off, or the end of January, sorry, we had a big dump off, right? Everyone thought it was the end of the world in January. We just held this whole channel again. See this gap up line? All the way up, ascending support, all the way up, ascending support, and then we had the midline through it, which is where it bounced a lot. As you can see here, here. It only touched this line in January, and now it's on this line again. So right now, what is positive about SPY is it hasn't taken out lower lows. Remember when I told you guys when you're watching SPY, you have to watch the tech sector and you have to watch the financial sector, right? So just pull up those charts. If you look at financials, look how strong they are. Where's the pullback in financials? It's literally straight up. It hasn't lost this 12-day EMA since February 3rd. It's been over this moving average right here. So as long as we're above this moving average, financials are fine. And if financials don't dump, SPY will not dump. The only way that SPY can dump is if both tech and financials dump at the same time, then SPY can dump. But as long as financials are strong, I mean, look how weak tech is right now. You can see on QQQ, this was the same channel formed on SPY, but SPY did not do this. Okay? So even today when I was taking that QQQ long trade, why did I take it? Because we were bouncing off the same support. We have this very clear support here, right? Even after we broke the channel, the first day we bounced off that support. The support comes back here. January 15th it held, January 12th it held. And once it got through that support, you see how it was struggling with it? It was resistance back here. Qs didn't want to break through this level. Once they did, they pulled back. And then the next time they broke through, they held it. This becomes support right here on January 12th. Goes up and then retests the support and then it bounces. Comes up, retests the channel, and then it bounces. So after it broke through the channel on the first candle, it held the support. It went up, it hit the bottom of this channel. So basically we held the support right on the first break of the channel, which was very bullish with this huge volume here. After it bounced that support, it rejected the bottom of the channel. So this trendline support became resistance. Just like we say, like sometimes previous resistance becomes support, sometimes previous support becomes resistance as well. So that's what I really want to show you here. And you see like QQQ already took out its lows. You see it closed below, closed at the low of the day. All selling volume, there's no one buying tech today. But QQQ took out its support. XLF is nowhere near its support. Look how strong it is. XLF support is way down here at 32. So for SPY to dump, like by dump, I mean to this support over here. 368.27 would be the next support if it breaks this trend line. So 368.27, if you want to see SPY dump that far, then we need to have financials pull back and we need to have QQQ or tech continue to pull back. So that's all I'm saying right now. And even if you like zoom out, so obviously our accounts are really, all of our accounts are in pain right now because we've been buying high value growth names, right? And that's what the market is going after right now. They're selling all the high value growth names. You can type in anything. So anything that's been ripping, Tesla's been ripping since March, right? Look at this sell off. They're selling off Tesla. They're selling off NIO, right? Anything that has like a very high valuation right now, they're selling. Look at space. I didn't even look at this chart, but look at this. Something that doesn't have many earnings, but they're valuing really high. Twitter's been strong, can't say that one. Etsy just reported its best earnings that it's ever had, and it's down 40 points from the low. So just stuff like that. It just gives you a sign. What else we got? SC held up well. SQ just announced that they're making a bank. Like they're making their own bank. And they're down this much. So they're just selling off these names. They're jumping into like old man names like Goldman Sachs, Morgan Stanley. You got WD. What's the ticker for that? Yeah, Wells Fargo. You see all the banks are ripping. XLF is still strong. As long as financials are strong, SPY will hold up. But as soon as XLF or financials turn around, that's when we're in big trouble. Why is this? Okay. Okay, so now we will go into, man, I had some things that I want to show you. All right, we'll just do some stuff here. Yeah, like Glenn's saying, CCIV. It's another high valued one. Like, what is this? It's just they're switching out these riskier names for names that have more consistent earnings, but not tech names. They hate tech right now. Snapchat. Yeah, so hedging, basically what I do is I like to hedge a couple different ways. So if my portfolio is really heavy in tech, I'll take QQQ puts. Like say I own, let's say I have a retirement account, okay? And I have 100 shares of Apple, I have 100 shares of Microsoft, I have 100 shares of Netflix, whatever. I have a bunch of tech in my retirement account. What I would do is, because when you have a retirement account, obviously you don't want to sell. You just want to hedge, take that hedge money and add more shares. So that's basically how I look at it in a retirement account. So let's say like obviously even Warren Buffett has, let's say we're looking at Warren Buffett's account and he owns so much Apple, right? When our accounts go down, we see our accounts go down 10,000, 1,000, 2,000, 5,000, whatever. When his account goes down, he sees his account going down 50 million, 60 million in a day, right? So that obviously doesn't hurt, like that doesn't feel good, obviously. But with him, what I would do if I was running his portfolio, instead of just watching it go down, I would take a QQQ put, or you can hedge against your individual name. Like say, do you get what I mean? Kind of like if you have a heavy tech portfolio, short QQQ as your hedge. If you have a heavy small cap portfolio, short IWM as your hedge. If you have a heavy financial portfolio, short XLF. But if you have a very diversified portfolio, one way to play it is the VIX. A lot of Canadian brokers don't let you trade the VIX. So a couple that I like are VXX. VXX, I think everyone has it. Questrade has it for sure. Interactive Brokers, I don't think allows it, but they allow VIX. So you can use these if you have a very diversified portfolio. And another one is SQQQ. This one actually goes insane too when tech is dropping. Like, look at today. This is March 2nd right here and March 3rd right here. So QQQ is basically dropping. This does the inverse of QQQ. QQQ closed at the low of the day. SQQQ closed at the high of the day. So this is just the inverse of it. And you have to kind of play with hedges. It's almost like I can't tell you how to take your hedge. No one can tell you. Ricky can't tell you. T can't tell you. A financial advisor can't tell you. You have to kind of play with it. So you have to see what kind of sizing you have to take. Yeah, so on VXX and SQQQ, they're inverse hedges. So basically, if you're hedging against your tech portfolio, you have to take SQQ or VXX calls. And if you think it's a bull market, you can take SQQ and VXX puts. So that's just how you play those two. Sizing, I would take a normal position size. That's what I usually do. So if I'm buying, let's say my position size is 10K, every single position I take, like equity wise, is 10K. My put or my hedge would also be 10K. That's been working for me so far, but I've still been playing with it just to get it like perfect. We'll see what happens. All right, let's get into oh yeah, somebody had asked me about earnings too. That Hydro guy asked me about earnings. Obviously, there's not an easy way to answer this question about earnings because there's so much to look at. Like, okay, so let's say if you're looking at a tech company's earnings and you're looking at a bank's earnings, they're going to be completely different. If you're looking at biotech, so just for example, if you're looking at Enox earnings, right? No one's going to give a shit about how much money they made or how many users they have or anything like that. The only thing that Enox earnings, the only thing that will matter is one, when are they getting FDA approval? And basically that's about it for Enox. When are they getting FDA approval? And is there a timeline? Is there a guide when they're getting it? And then other biotechs, you won't really care about their sales either. You'll care about news or like FDA approvals or clinical trials or like how many patients did they cure on their last clinical trial. So that's what you're looking for in biotech. If you're looking at tech companies, you have to look at the revenue. Did they beat the analyst estimate on revenue? Did they have any user growth? Are they still growing company? Is the revenue growing or has it stalled out? And the most important thing on every single earnings and guidance is guidance. Sorry, every single company when they report guidance, that's the key factor. What do they think they're going to make next quarter? What do they think they're going to make next year? Stocks go up and down based on guidance most of the time. Then obviously like social media and streaming companies, you want to see user growth. That's the main thing. You want to see people are still coming. They're still getting new users. And right now, no earnings are working at all. Like Zoom just killed their earnings. And this is Zoom actually had a really good earnings. If you looked into it, they beat on everything. Almost every single category that the analysts estimated, they beat it. They raised guidance. And this is what happened. They went from $439 at the high. Today they traded for $339. Zoom lost $100 off their stock price after a good earnings report. So right now they're just selling everything. This is not looking good right now. It could be manipulation. Again, like what me and T were thinking is just Cathie Wood might be targeted now by the by all the hedge funds just because she's been doing so good. She's getting all the attention. Now they're just kind of forcing her out kind of thing. All right, so we'll go into some charts now. I think REI, I called this one out. I've seen a lot of flow into this one. Something was going on, so it's one of the few charts that hasn't broken down too bad. So right now, obviously, with the market how it is, you want to like slow down a bit. You want to control your position sizing. Don't go as big as you usually do. But yeah, this REI, this is the day it got so much flow. Perfect bull flag and breakout. It's textbook bull flag. And now it's just flagging again on low volume. So when there's low volume, that means not too many people are selling it. It's just coming down because the market is weak. This one looks good for a swing right here. I would even buy it through yesterday's candle. So if it breaks 227, you could buy this one. But again, consider your position sizing. Don't take the same position sizing you were taking in February. Whatever, man. Kathy has enough money. We don't need to help her. She's still laughing with her billions of dollars. Air Canada. Why am I looking at Air Canada? Yeah, see, airlines are ripping. They're buying garbage now. All the stocks that they were selling off before to buy these high flyers, now they're buying them back. Air Canada, you got LUV, you got, see, this is a perfect bull flag right here too on Southwest Airlines. You got Delta Airlines, same exact pattern. You got American Airlines. Oh, this is not American Airlines. Whatever. But yeah, they all look the same. So airlines or whatever, REI looks good. Canada's chart is good, I mean, but I'm not really interested in the airlines. EGLX is really strong today, even though it's like a growth company. Really strong. Relative strength like this, like on a day like today, is very good. I actually see an entry here on EGLX if you missed it. So yeah, we just broke out of the flag today. Even on a day like today, it was like barely down. No, it's just retesting the wedge. Let's see if I can get some follow through up tomorrow. Tiger. Tiger's a good one. I've been hearing a lot about this one. Looks like some Chinese company because it's an ADS. Chart wise, it's broken down like a bunch of charts are right now. There's just like, I don't really see an entry on this one. Just looks like the rest of the market, man. Just looks like a bear flag. See the big move down, broke the moving averages. I want to see a stock hold the moving averages. That would get me interested. But this one right now, it's just downtrending. You're going to notice today there's not going to be a bunch of charts that are worth buying just because the market just broke everything down. Remember the last time on the charting session, all the charts you guys were saying were they were all extended. They're all far away from the moving average, and I told you guys like we need a pullback. We're too extended on everything. And yeah, so that's exactly what happened. And now all the charts are looking broken. Silver right here, you can see before I even draw anything, it has this previous resistance right here and right here, and now it's turning into support. So silver needs to hold this $24 level. If it breaks below $24, then it's dead for a long time again. But what I did like, I seen on Twitter, let's see if it's on silver too. This is the monthly now. Yeah, you see this cup and handle right here? It's a little bit, it bent to this resistance, but it's a very clear. If you guys know what cup and handles are, it just formed, it went up, everyone sold off, it went back up, everyone sold off, and now it's forming the handle. Once the handle forms and it breaks out, silver could actually run this year, especially with the market crashing. I think a lot of people will jump in silver. So I still have those calls for July. We'll see what happens. Go Adobe. Adobe. Oh wow, look. Stonctions. I had it drawn as well, but on my chart, I see it already breaking through. I really wanted to hold. I wanted it. This is the weekly actually. Hold on. Yeah, even the daily is even worse. I mean, I could adjust the line a little bit, but I still have it breaking. So when I drew this trend line, you see how many points I'm touching? Like I'm touching this support, I'm touching this support, I'm touching this support. You want to make sure that it touches as many as you can. You can't just like, because like you seen it, you drew it like this, right? So you're just drawing that because you've seen today's candle already. Before you've seen the candle, I had it drawn like this, and that's from the last charting session. So that's why right now I don't think it looks good at all. It just broke, it closed below the 200-day too. You see this blue line right here? It's the 400-day moving average, or the 200-day moving average, and it closed below it. That's never a good sign. Even if it dips below it, like it did this day, it closed up here. You know what I mean? So it bounced off it. This one just broke through it and closed below it. So that's not a good thing. It's probably a good ad. EGLX, I'm pretty bullish on, man. That one has a lot left in the tank, I think. Go Disney. Disney's really strong, like relatively to the rest of the market. Hasn't even lost its daily upper high. So basically, when you're looking at a stock to go into an uptrend, right? Like I told you guys. So we have up, and then just let me draw it. We went up, we pulled back, set a higher daily low, right? We went up, pulled back, set a higher daily low. We went up. What just happened? Yeah, so we went up, went down, but this support right here did not break this support. That means our daily is still in an uptrend, even though we pulled back. So what's going on right now is, you see how it went up, but it didn't take out this high. So now we wait and watch. If it comes down, we want to see it hold this. What is happening? Having a little technical difficulties here. Okay, yeah, but whatever. You guys get it, right? We're still in the daily uptrend, but we need to see if it holds this previous support right here. This is the support I'm talking about. So as long as this Disney, thank you, Glenn. As long as this Disney holds above this support right here, we're still in a daily uptrend and everything is fine. The second we take out this low right here, that means the uptrend on the daily chart is lost. We can start looking for bearish entries. But as is with a lot of charts right now, if you look at the weeklies, we're so far extended off the moving averages. That's why I think this pullback could even get worse. Like nobody knows, it could bounce tomorrow. But just looking at all the charts on the weekly and the monthly, they're very extended. Just take a look in history. Every single time that it's been this far, like there's an air pocket here, right? Away from the moving average, it pulls back. Then it plays around with them for a little while, then it goes again. Then there's an air pocket, then it pulls back. And this is a monthly chart, so every candle is 1 month. And look how far off we are right now. Have you ever seen Disney this far off the moving average? From here to here. You know what I mean? So every single chart is just very, very extended right now. Look at NEO. Look how far off the moving average it is. Big air pocket. This one, NEO could technically, it could come down to 32.75 and then go sideways for a long time and before it goes up again. Same thing with Tesla. Like if you zoom out and look at these charts, it's scary. We'll see what happens, but I mean, we could have a big pullback. There's a big air pocket right here. Anyways, move on. GE monthly chart looks good. Look at that. You should show this monthly chart to T if he's not in here. You should show this, so he'll get really happy with this. You have a clear resistance at 1325. This is all the way back in 2018. This resistance was set. Ever since then, it's been underneath. Went back up to 13, tested it. Went back up to 1325, tested it. Couldn't get through. Went back down. Formed a cup, and now it's breaking through. It got through. It's at 1362 right now. So GE actually looks really, really good. Better than it's looked in a long time. And if GE gets going, it can go a long way because this is all just falling down. GE could technically GE could go to $31. I don't know how long it'll take, but it could go to $31 for me. All right, we got Beam. Yeah, Beam's so extended, man. You see this? It's the same thing, bro. It's like they're selling off these genomics and these companies that aren't making lots of money. They're selling them to buy more solid companies. No worries, CoinShow. Go to a weekly chart for Beam. See, we had that trend up that we were watching. I bought on this day, I think. And then it broke through and it's just been sideways now. For 4 weeks, it's been down. And if you look at the daily chart, and this is pretty clear support here on Beam. See, this day hit it, this day hit it, this day, and this day. So tomorrow we want to see it bounce off this 8250 level. If it breaks below 8250, there's a lot more downside again. These charts just look wrecked right now, like a lot of charts. And if you zoom out on their charts, there's a lot more room to fall to. But we'll see what happens. What are some key important things you look for when you're shorting a stock? For like example, my favorite short setup is when two things come together. So let's see if I can find an example. When there's two, like when there's two supports, an ascending support and a sideways support, and a stock breaks through that, that's my absolute favorite setup for shorting. Let's see if we can find something. Bear flags are good too. I mean, this is just a clear bear flag. If you look at Tesla intraday, it was like so easy to short this name. Like all day, it was just rejecting my yellow line. You see how it goes up to the yellow line, it hits it, and it pulls back. It goes up to the yellow line, hits it, break, comes back. All day, I just watched a 15-minute chart, goes up, touches the yellow line, pulls back all day. These kind of shorts are just easy. Every time it goes up to the yellow line, you short it, wait for a little bit dump, get rid of it. Then it bounces back to the yellow line, short it, wait for a little bit of dump. This is kind of what Raji does too. And yeah, just super easy to short when it's so like straightforward like this, you know? Like ZM. Look at this. I should have been shorting this since yesterday. I just haven't been concentrating enough. You see this yellow moving average? As soon as it broke underneath the 12-day moving average, it's just steadily been underneath it. So you could have shorted this at any point. You could have put your stop loss above the moving average, and then you just held it short. It would have never proved to you. Right here, it would have bounced over. You get stopped out. When it goes underneath again, you just short it again and hold it. Every time it even gets near the yellow line, it just pulls back. MSTR. This is the Bitcoin play, I believe. I think this one did a share offering or something. That's why they're down there. But technically, if you really, really like Bitcoin and you want to be an MSTR, I'll just be watching this range right here. Let's use this one. It's just stuck in this range right here. So all you want to see is like, Yeah, just watch this 4-hour range that's developing on MSTR. If you want to go long MSTR, you have to wait till it breaks $830.30 with a lot of volume. If it breaks it with that, then I would buy it. If it goes down to 681 and support, and it shows like some buyers are showing up, I would buy it there too. So I'd buy it at 681 off support with a tight stop, and I would buy it above 830 with high volume. That's what I would be watching for in Monster. If you're just holding right now, I would put my stop under 681. Even though T would probably tell you to hold it forever, that's just what I would do if you had it. BlackBerry just dying off because the whole Wall Street bets thing, man. It's clumped in with the rest of the names. Even though this one is actually a good company, a turnaround story that could turn into a great company, it's just clumped in with all those shitty names from Wall Street bets. So this one, when it does recover, it'll recover nicely. I still do have leaps, but for right now, it's just you just chill in it. You don't really see any ad or anything. Maybe a falling wedge, but let's see. Could say that's a falling wedge, but it's whatever. No real play on this one. Yeah. It's just chilling for now. We got a lot of time. Once the market comes back, we'll have, I think those leaps will be in the money. I'm not really worried about that one. Bitcoin, I'll leave that one for T. He really likes Bitcoin, so don't really want to take it away from him. But another thing I wanted to say. So it looks bad right now, right? Zoom out on the chart, man. Look at this. We go monthly. Let's go monthly right now. Let's just do it from another one. So if you're holding a strong company, they should come back. Let's say you held Amazon, right? Let's say you bought Amazon at $1,000. Okay, you bought Amazon at $1,000. It goes up a lot. It goes on a major bull run, like we just did. It went from 1,000 all the way to 2,000. Right? You're happy with your gains, whatever, but you get greedy because you're like, yo, I'm up $1,000 per share. Why am I gonna sell this? Amazon's going to $1 million per share. Then what happens? Even though you're up $1,000 per share, it goes down in a couple of days, right? You're like, oh shit, like, oh, it's gonna come back down to my $1,000. I better get out. So then you sell it around like 1,500, 1,400 down here because you can't take it anymore. After you sell it, look what Amazon does. It keeps going up, keeps going up. And if you held it till today, even Amazon's $3,000. You would have 3x your investment. So if you're holding strong companies and you want, like, you believe in the company long term, don't get worried about a couple of weeks of up and down. Just sit on your hands, go do something else. Go hang out with people, take your mind off it. Yeah, that's what I'm saying. Every single chart looks extended on the monthly. You can open up any single chart. There's a big air pocket between the monthly candle and the moving average. And if you look at Amazon's monthly chart, it very rarely loses the moving average. It lost it here in 2001. This is the internet boom or the dot-com crash, whatever you want to call it. Then you had, let's see if we can find, TradingView doesn't want to work, whatever. This was actually in 2018 it did this. It was just a correction. I think it was in February. No worries, bro. I got Disney in my TFSA. I never touch it. Yeah. Just like I just said, Glenn. If you have a good company, Disney is definitely a good company in my opinion. I wouldn't even worry about these 2-3 weeks. If you want, you could add to it, but I wouldn't sell anything that I have for much lower because it's hard to get back in. Once you sell it, it's very hard to find another entry point, and then you're just gonna watch it go over your price that it is right now, and you're gonna buy back in. So if you have good prices on good companies, I'd say keep them. LSPD. Look at that. Look at that air pocket right here. You guys know what I mean? Like there's so much room for stocks to pull back right now. So you kind of have to be prepared for anything. We could even pull back for 2 months now. Or we could rip tomorrow and fix everything. But the daily chart looks like it's taking off the moving averages too. LSPD could be a good short here actually. It's a good one. I would say resistance, I mean support, you could say is right here. Yeah, so as soon, if it breaks to 84.25, you can short this LSPD. If you want, I'm not a financial advisor. I might join you on this short actually, it's pretty extended. Okay, we'll go to ZOM. This is a good chart, those functions. That's what you want to see in your shorts, by the way. Okay, so Zomd looks completely fine. I bought it. Look at this moving average right here. You see the orange line is the 26-day moving average at 68 cents. Zomd went down to 68 cents and it closed above 68 cents. It went below it, but it closed above, meaning it's holding the moving average. It bounced off it. Even today, it pulled back with the market. It went to the penny to the 26-day and then bounced again and closed strong. So Zomd I really like here. I did actually add it at 0.70 on Zomd. I think it was either today or yesterday. But now we're just waiting for this one because the market's weak. I don't think it'll run, but while the market's weak. But this one I think has a lot more upside. I would draw my support right here. See also the moving averages here and the previous high was 64 cents. That's exactly where it stopped, at 64 cents. So this is what I'm talking about when you have two things of support. You have a moving average and you have a support line from somewhere. That's called an inflection point. If it broke under here, I would have got rid of my Zomd, just technically. But I do believe in the company long term and I will probably hold this one. This is just like your Disney question. I'm gonna hold this one for like 5-10 years, see what happens. WM. This is waste management. Yeah, waste management is good in a downtrend market. Whenever the market's suffering, people run to like these safer dividend companies, like waste management, Coca-Cola, gold, gas, Enbridge, this kind of stuff. Chart-wise, it actually looks pretty good too. So we got this long down channel. Just see it like that. Very clear down channel. What I would have done is buy the bottom, sold the top, or short the top, sell the bottom. Just wait to see how it reacts tomorrow to this trend line. If it opens up higher and it has some volume, this one could actually be a good entry tomorrow. Just don't expect these kinds of companies to run 10% in a day. This thing's gonna move 10% in like 2 months. Neuro. I actually sold my Neuro today. I just didn't like the chart, didn't like the setup. Just like I told you, it's just a bear flag. So it broke down from its trend line. I was just seeing if it would bounce. Had no bounce at all. Formed this bear flag right here. And I didn't really want to be around to see if it broke down because today we had this massive volume as well. This is what I didn't like today. This is why I sold today. There's a lot of selling. We closed at the low of the day. And a huge upper wick of people profit taking. Part of this profit taking was probably me because I sold it all. So I am out of Neuro. I took a little hit on that one. It's all good though. I'll get it back. And we'll go to GT. Do GT right now. This one's ripping. It's a tire company. This one actually announced that they're charging more for their tires, like a lot more for the tires. I guess the market liked that for some reason, but that just shows how much inflation is going to happen. And I have no idea why else they're ripping, but I mean, if you want to buy tires, then like go ahead. Chart wise, it's extended, as you can see. Even on the daily, it's this far. Oh, what? Even on the daily, it's this far off the moving average. Yeah, so off the daily, it's this far off the moving average. Then the weekly, it's even farther. And then the monthly, it'll be even farther off the moving average. So tires, just you really want to buy tires when they're this high? I mean, wait a second. Yeah, there's not really anything right now. It is at a big resistance point right here on the monthly chart that goes back all the way to 1883. It goes all the way back to 2011. Wow. Yeah, so this is a 10-year-old resistance that it's coming up on, but it's run so much straight into it. I want to see it like kind of go sideways and then rip through it, or else it's going to have a hard time with this resistance right here. But again, I'm not really interested in tires. I'm not going to buy it. PLTR. PLTR. I'll do PLTR and workhorse, and then I'll just talk about a few things that you want to do right now during the market like this.
Those are kind of flew after hours.
What, sorry? Yeah, so there's very clear support on Palantir right here. As T actually called me. This is funny. T called me while I was at the gym, and he's like, "Yo, PLTR could be the next rocket." I went onto my brokerage at the gym and I bought PLTR, and it did rip a little bit after hours, but we'll see what happens tomorrow. Hopefully, it can go like PLTR. And just a very clear support line at 2250. If it breaks 2250, I'm out of this one. That's my absolute out. And tomorrow, we want to see a gap above 25, and we want to see it go. But I think it's already above 25, so
Let's go.
as long as we hold this support, we can see where we're going up top. But again, it's underneath the moving averages. I told you guys, when the moving averages are above, it usually means the stock's in a downtrend, which it is. Like all through here, it was just an equilibrium sideways. This was the easiest buy ever in Palantir. Such a great technical buy right there. You see that? It just went up, went sideways, built up pressure, people accumulated shares, and then boom. And then it gave it all back. So now even Kathy Wood's buying, I think. I just want to see it hold the support line and good to go. Yeah, it did go after hours. That's why I bought it. I do workhorse. Workhorse is just a bear flag, man. This huge dump off because of the news, but this one is all based on the news. Workhorse chart means nothing to me right now. It's like if they get the UPS contract, they'll be right back to $40. If they don't get the UPS contract, they're gonna stay right down here. This workhorse has nothing to do with chart at all. Right now, technically, it looks like shit. Look, it's just big dump. Now it's flagging before it dumps again. That's technically what it is, but this one all depends on the USPS contract. And yeah, so just a couple of things I wanted to go over. I told you guys, like, if you have good stocks from a good price, you might want to just go do something else for 2-3 weeks, a month, whatever. Just go and chill out. The stock market will always be here. Your stocks will probably be higher when you come back, and you won't panic and sell. Secondly, you always have to have a plan because anything is possible. As I told you, the daily looks whatever. It looks daily looks like we had a couple days pullback. If you go to weekly, we haven't even entered weekly consolidation. So right now, every healthy chart, they always consolidate. They run up, they come down, but they hold their previous low. So right now, SPY, as long as it's above 368.27, we're still in a daily high. Like we're still in a daily higher, because like I said, we go up, we pull back. This is our higher daily low. We go up, we pull back. This will be our daily higher low whenever it sets. We just want it to be above this higher low. That means we'll still be in an uptrend. If it breaks this 368.27, that means we go into weekly consolidation. So when we have weekly consolidation, we need to set a higher low on the weekly. And to set a higher low on the weekly, we have space till $322. That's far away. You know what I mean? Like it could take a long time. As long as our weekly lower high is above 322, we're still in a weekly uptrend. So this is what I'm trying to tell you. This pullback could last a lot longer than you think, and it could still be healthy even if it does. So yeah, that's all I want. And always keep cash in your account. Always be hedged. And don't buy the dip too early. Wait for it to dip, and then wait for it to start turning around before you start buying. But yeah, that's all I wanted to say. Good luck trading, guys. See you guys tomorrow.
Thank you, bro. Thank you, love.
No worries, brother. Have a good night, man.
Have a good night, love. Thank you.
I need to say something. Thank you, love.
Hey, thanks, love.
No worries, boys.